Good afternoon, everyone. Welcome back to Short Verticals. Good to have you aboard this afternoon as we're going to talk a lot more about just overall market, what's going on in the market, how the Fed announcement impacted things, and just some macroeconomics. We're going to get into our existing paper trades, see how they're doing, discuss whatever trade management we need to do with those, if any, and then we're going to talk some scans. Try to find go searching for some potential opportunities for paper trading, some short verticals. And finally, we'll wrap up with taking some of those and looking to see if we can place any paper trades on those and leaving you with some follow-up homework to keep an eye on until we meet next time. But good afternoon to WC, Richard, Will, lots of others. Hey, thank you for joining me each and every week. I really appreciate it. It's fun to have you with me. And for the new ones, I can see a couple new ones out there. Thank you for joining as well. Hopefully you get a lot out of this. And one thing I might say, please put comments. I know we have the chat here, but if you're watching this on recording, please put comments down below that of what you'd like to see, things that could help you understand short verticals better, and we can weave things like that possibly into our education. So let me know. But before we get too far, let me just cover some quick disclosures. And so do remember that options do carry a high level of risk, not suitable for all investors. Information that we cover is for general information purposes only, should not be considered an individualized recommendation. Schwab does not recommend the use of technical analysis as the sole means of investment research. Paper money is for educational purposes only. Short options can be assigned at any time, whether in, out, or at the money. They can be assigned at any time. Please understand that. Investing does involve risk, including loss of principal, and past performance does not guarantee future results. And then a couple more here. Here are like your option Greeks and the definitions there. Watch out for liquidity. And then if you do use a stop order, do remember a supplement order. A stop loss does not mean you'll necessarily get out at the price that you're set. It can change into a market order. All right. Now, with that said, again, hey, if you haven't done so and you've been, following us or watching these webcasts, please, hit the like button, hit the subscribe if you haven't hit the subscribe. Please do that. It just not only helps us in the algorithm, but it also can let you know when we have, new things coming up. And so please join our family of subscribers. But for now, let's get over and look at what's going on in the market, as I mentioned. And I want to start off with the SPX. I don't want to spend a whole lot of time covering the broad market, but I always think it's good to kind of get the lay of the land, right? And so let's do that. And so looking at the SPX, I thought it was interesting. We had that Fed announcement that came out yesterday. And, almost if you look at these 2 days here, you'd almost think that this is the day, this candle here would be the day that the Fed announcement came out, right? Well, not quite. It's actually the smaller candle here. Now, we did see a little bit of reversal, and kind of talking about the Fed announcement. It was interesting, they wordsmith that thing so carefully, right? But they went into, what's going on, they talked about the economy, activity. They said it went from moderate, expanding moderately to just a solid pace. They said job gains have remained low instead of slowed this year. They changed that to remained low. It's the unemployment rate, and they changed it to show some signs of stabilization versus edging up, is what they said before. And before they said inflation has moved up since earlier in the year. This time they said inflation remains somewhat elevated, right? And so they kept, they said, hey, they want to keep that inflation down and keep unemployment down. Well, yeah, both of them down, right? And in the end, it really came out to be kind of what most people expected. Job gains are slow, but okay. Employment stabilizing. Inflation is higher than they wanted. The economic outlook looks a little bit uncertain, but with that, they kept rates the same between that 3.5% and 3.75%. And I want to show you something like looking, I posted this over on my X account. So, excuse me. Sorry, a little itch there. Didn't mean cough in your ear, but please go over to X. Give me a follow. Brett Crowther CS is my handle. You can see how it's spelled there, Brett Crowther CS. But on that, I do post things and economic announcements. And one of them that I did post is I posted just an image. Let's see if we can make this a little bit bigger. of what happened yesterday when that economic announcement came out, right? And so you can see this is a 5-minute chart. So this is kind of the beginning of the day over here, and this is the end of the day over here, looking at it in 5-minute increments. And right here in this big red candle is when the economic announcement, or the FOMC report, came out. And it's almost in a channel. And if we look at this, if this is where it came out, it really didn't close much off of where it came out. So the market really didn't do a lot with it. Of course, it takes some time, even after it's released, to read through the report, see what changes are made, kind of get into, reading the tea leaves and saying, okay, what does this mean with the slight change here and there? But really, there wasn't much that happened out of it. And so, which just means a lot of that price action, or the expectations, were priced in. We didn't see a lot of movement, a lot of price action change on that. But other things that did, that can impact the market, with the SPX is, the Fed likes to look at the, there's the PPI that's coming out tomorrow. And so, take a look at that, see how that plays out. The Fed really likes to look at the PCE, the personal consumption expenditures. And this comes out, it's been kind of funky when we had the closure, the government closure. And so it's put things behind, but it usually comes out about 3 weeks after the end of the month, to say what it was for the prior month. And that is their preferred measure of inflation. That was up a little bit. Is it 2% last time it came out, I believe. A couple other things, trade balance came out this morning, in fact, and this is interesting because the trade balance was negative 56.8 billion, which was above expectations, which was negative 43.4 billion. And the way the trade balance works, it's actually a little bit of a bullish outlook for the U.S. economy. And the way I explain that is we're a consumption economy. And so when actually that trade balance looks worse, when it's like, 10 billion more than expectation, what it says is we're, you could say, okay, well, how the trade's going back and forth, but generally it's indicating that there's a good likelihood that we're consuming more. And so, take it for what it's worth. In fact, those numbers are actually a little bit lower. Back in the heyday, when we were talking about the teens, the 20 teens and stuff like that, it used to be about 80, 70 to 80 billion in the negative side. So it's not as strong as it used to be, but still stronger than they expect. And then the weekly unemployment claims came out, and that comes out every single week on a Thursday. It was 209,000 unemployment claims. Just a little bit different from expectations, but that one usually doesn't shake up the market. So there's a couple macroeconomics out there. I think a little bit of, just some of that uncertainty. Of course, what's really impacting the market right now is we're getting some earnings reports. Some have been strong, some have not been strong. And depending on how large that stock is or that company is, it can impact the market, right? So overall, though, what do we see? Well, we see a market that has been climbing, that is simply pulling back to a support level. So, nothing out of the ordinary. It's just doing its thing, moving on up and pulling on back, right? Let's see. Let me just hit some of those questions I just saw real quick. What was the CME Fed Watch tool expectation before announcements? It was priced in. From what I understand, it was right where it is expected. Yeah, in fact, that's what you said. 98%. Someone said Microsoft caused volatility or something. Let's see. I didn't get a chance to see. Let's just look at Microsoft real quick. I mean, there's a couple stocks. We did have some that gapped down. In fact, what was the other one that gapped down real big? Oh shoot, was it Meta? No, Meta jumped up. Meta had a huge pop, and so this one dropped down, but then Meta popped right up, and so we've had them go either direction, so kind of possibly offset some. But I haven't looked into the actual news on Microsoft. Again, right in the middle of some earnings, keep an eye on that stuff. All right, let's jump over though. What I want to get to is let's take a look at the positions that we have right now. Let's take a look at that. And as always, this almost, this has been crazy how the day of, the trades are doing okay until day of, right? And then whammo, like our Amazon was up pretty good until, this morning, now it's down $75. And the city is actually okay. I'll go show you where it's at here in just a minute. But, it's down, yes, but it's still, it's doing its thing. So let's go ahead and take a look at that. So let's go at the chart. Let's look at Amazon first, AMZN. And what we did is we had 6 contracts on this. on Amazon. We sold the 227.50, and so let's put a line in there. Let's zoom in on this a little bit, and we'll put a line of where we sold that 227.50. So I'm gonna kind of ballpark it right about here-ish, right there. Boom. Yeah, nice. I had it right about there. 227.50. So that's where we sold, right there. Okay. And then we bought the 225. What did I say? 227.50, right? 227.50. So that's our line in the sand. So that's where we need it to be above by February the 20th. Now, let's see, we're just kind of at the end of January. And so there's still time. It wouldn't be surprising to see it kind of come back, find a level of support, bounce, and head back up. We do need to keep an eye on this earnings. It is coming up, what is that, the 5th? And so that's going to be, about midweek next week. And so actually, it's next Thursday, of course. Of course, it's going to be Thursday, right? The day I'd like to actually talk to you about it in the class. But what I'm going to have to do is, for this paper money example, the way to manage this trade is earnings is such just a wild card, right? You don't know exactly what's going to happen, or even if maybe the earnings is good, but the outlook is bad, something like that happens. And so the stock drops, even though it had good earnings. There's just so many factors that can come across in the earnings that when we're looking at those probabilities, the probabilities kind of change, and there's just this wild card that can just almost not throw it out, but just alter that, and it's a lot less predictable. So with that, I'm going to look to pull that out. Hopefully, we can get a little bit of a bounce in here, and with some time decay over the weekend and whatnot, that can help out that position. And then I'll look to close that out before that earnings announcement. Now, the other one, Citigroup. When we look at this one, well, what's going on with Citigroup? Well, not a whole lot, actually. I mean, if you look at where it is compared to where we got in fact, let's pull this down and get a little bit more room in there. There we go. You can see right here is where we got in on this oval right here, and it's pretty much gone sideways from that point, right? This one, we sold the 112, so it needs to be above. Let's draw a line in there. Needs to be above. It's like Ricebird joined us. Welcome, Ricebird. Right about that ballpark. And so remember, it needs to be above this level at expectation or expiration. And so I just want to kind of set the stage and some expectation on this. When we're looking at something like this, we're saying, oh, wow, Citigroup is down $153, from the opening. Well, this is where we have to remove ourselves from that emotion, just like, remember, these are time trades, right? These are trades that they take time to work out. What we're waiting for on this trade, we go out to it, is we have, let me change the volume open interest to our delta gamma theta vega. Let me get rid of this. Okay, so here's our position. And really what we're looking for is, we got time going on. Now, we bought this one, so we're losing 7 cents a day, but we're gaining, 8 cents a day, meaning this is, a credit to us, and that's a, debit from us, right? But we're making a gain there, and that will change over time. This will pick up steam, and that will obviously, that's kind of the idea behind the trade, is that this eventually these should even broaden out a little bit and get a little bit larger, but it picks up, and then obviously, hopefully we've already had earnings on that. With the Vega stays low, that drops down, and it can help out that trade. And as long as price action then also just works its way sideways, it's going to be it's fine, right? We just need it above that 112 at expiration. And whoops, let me get let me get rid of that dot. Let me go back to the chart. And where is it right now? Well, it's $114.18. Yeah. And so it's still above it. We're just looking for a bounce, and it's really sitting, from a technical perspective. What do we see here? Well, we see a run up. It's doing pretty much what we expected, but of course, maybe what is expected and what we want, sometimes those aren't congruent, right? What we want is for as soon as we get in, the next second for it to just run like mad and give us our full profit, right? But we have to be realistic about that's typically not what happens, right? It ran up, it came back, and this is an area where it should find support. One of these three areas is a typical support level from Fibonacci. You can see it. Hey, it's been channeling around here, just kind of bouncing off this holding. And as we do that, we look at the MACD. We can see the MACD is rising in the it's not bullish yet, but it's less bearish, right? So the bearishness is waning. It's becoming almost more bullish is one way I guess you could say, but it is less bullish is the way how you really state that from a MACD perspective. And so, that's working out in the favor that we're wanting it to go for this paper trade, but we just got to give it time. This is where the patience comes in. Oh, this is where the patience comes in. And that's the challenge of short verticals, right? Sitting on the hands and waiting. Hopefully you guys are all good at doing that, but I know it could be a challenge at times. But so there's our two trades. And so we're going to see if we can add a few more to that. And in order to do that, there's a couple ways we can do this. I mean, a lot of times what I like to look at just when I'm thinking about, what criteria could we use for short verticals? And one of them is obviously is the volume good. Now, why do we want the volume good? We want volume good because the higher the volume, the tighter the bid-ask spread, right? And those bid-ask spreads, they can get very wide and they can just be almost insurmountable on any kind of a vertical trade, right? So if we're looking for something that's kind of has some good technical patterns and something that has high volume, that's kind of the basis. In fact, let's go out and put a scan together for this. And so let me get back my, oops, when I click on there, let me get off of that. I was trying to remove the dot, get back here. Here we go. So let's go over to the scan tab. Where's our scan right there? Okay. And let's scan for, let's scan for something. So the first thing that I want to do on the scan is I want to come in, I want to look at this as not in all stocks, but I want to put in the S&P 500. Now, the reason behind the S&P 500 is that actually solves a lot of issues. I mean, it really does help with the volume. It just, generally speaking, it weeds out a lot of the little, this stock is, a penny stock or something. It weeds a lot of that stuff out. Just make sure, generally speaking, one, it has options. Two, it has, generally good volume. In fact, we'll add another volume criteria in here, but it has good volume. Liquidity, there's generally liquidity. I mean, it's not perfect across everything, but that's the first step, and it takes care of a lot of that for us, right? Now, the next thing we want to do is in fact, I'm not going to use these right here, so I'm just going to go ahead and remove these, and I'm just going to add a filter of our own. And what I want to do is add a study. And I do want to add, so I'm going to come over to the, it always starts off with ADX because it's just alphabetical here. I want to come over to volume. So you see where I went, just clicked on this here, come down to volume and do average volume. And we can leave this as saying, okay, what do you want this? The last 50 days, I'm going to say last 50-day average volume. Let's make sure that stays higher than 1 million. So it's just trying to kind of even take that S&P 500 group and cut off some of the lower, ones that don't have continuing high volume. So we can leave that at 1 million, and that's good there. All right, let's add another one though. Let's go back and let's add more here. So I'm going to add another filter, and this time what I'm going to do is a study. But what I want to do is something. There's different types of searches we can do. And what I want to do here is, generally speaking, the market has been up. If the market was overall down, I'd look for something more bearish. But since the market has been up, I'm thinking, let's look for more bullish type plays, okay? So how can we do that? Well, let's do this. Let's look for, in fact, looking at these, these stocks, if we're kind of come back, let me get something else, not Citigroup. Let's go to like Tesla or something. Okay, so what do we have here? Overall, an upward trend. So what I like to see is a stock that's usually above the moving average, or maybe a rising moving average and above the moving average. And usually, typically speaking, if it's above a moving average, then that's going to give us generally what we want for a bullish type play. And so we're just talking about Amazon that we got in that, and that was kind of the same thing as above the moving average, looking for it to come back and bounce. And so that moving average can be a great tool when we're putting together a scan. So what I'm going to do here is I'm going to come into this, and I'm going to actually go down to custom, okay? And we're going to create a little bit of a script in here. And so what I want to do is, it still has that ADX, don't worry about that. We just want to go over and edit that. And what I want to say is, let's do price So we want the price, and they have last. Don't say last. So that's okay. We'll go with close. So say the price, the close on the last price is greater than, and then let's do a study. So I'm going to click on study right there and do a simple moving average. So simple, that's right there. I type in SIM. Here we have simple moving average. Click on that. And this is going to default to a 9. Now that's really short for a simple moving average, or any moving average that's really short. And so we want this a little bit longer. The one we had on our graph was a 50, so I'm going to put that as a 50 as well. And then I'm going to save that. So again, just we're saying price is greater than a 50 period simple moving average, and say that. Now I'm going to add a couple more conditions, because what I want is something that's been rising up and possibly pulling back. I mean, we could run with this. A lot of times putting together a scan is a little bit of just trial and error. Just seeing what works. And sometimes what works one day isn't quite as good another day. But the idea behind this is we're going to narrow down, how many stocks are out there. And so let's add a condition, another one. We're going to, again, do price, and we're going to do close. So same thing as before. And we're going to do is greater than, but this time we're going to make it a little bit tighter. So we're going to put an exponential moving average in there. So I'm going to go back to study and say EXP. Hopefully that'll pull us up. There we go. Moving average exponential. And on this one, what I want to do is put it, say it's above a 20. That if that's a little tight, maybe we do a 30, something like that. You can adjust that back and forth. But it said condition did not take. Let's see, close. I'll go back and check it. But again, so we want the close is greater than the 30 period exponential moving average, and save that one. So it looks like everything's saving so far. We got the 50, we got the 30. All right. And then one last one. Now, so we could leave it at that and look, if we're looking for maybe a pullback, some people let me just show you one other condition some people might do if they want like a bull flag, they're saying, okay, I want it to be pulling back to support, not just up, is we could do the same thing one more time. Price, close, click on that. But this time we're going to go to is less than, and we're still going to go back to that exponential moving average. So again, hit study and type in EXP for exponential right there, moving average. And this time we can put in like a 10 in there and then save that. Okay. And so when we have that, we'll hit OK here. And then that what we're going to be looking for is stocks that have been overall up and slightly pulling back, possibly giving us a potential setup. And so I'm going to hit OK there. And we're going to go ahead and scan that, see what we can come up with. All right. How many do we get? 50 of 51. Well, I guess we'll have to filter it then, right? Now, by the way, we can go look at these here in just a second. But one thing we can do, there's a couple different things to make it easy to look at this. One is we can save it as a watch list. And so I can just click on the three lines. Some people call it pancakes, some people call it hamburger, whatever you want. Save this watch list. And I'll just say this is short. Come on, short verticals. Class 129. So you can save it whichever way you want it. The other thing that we can do is come up here to where it says add condition group. Click on that, and we can actually save that, right? And so this, I don't want to name that short verticals, because really what this is more like a bull flag kind of a setup. Because that's, if we're looking for a pullback, possibly bouncing off support, that's not only good for, that's just a bullish setup, right? And we can use that for our short verticals, but we put it also in there with higher volume and in the S&P 500 to kind of weed out maybe just what would be a stock play into something that would be more conducive to a vertical or some sort of an option play that would have better bid-ask spreads. And so we could call this bull flags, or bullish plays, or bullish setups. I'm just going to call it a bull flag in S&P 500. Okay, and then save that. All right. Then what we can do from there, by the way, actually I want to do one other thing. Let me do this. I'm going to I'm going to share that. I'm going to click on share. Click here. This is going to come up. Grab that. And then I can put this in the chat and share that with you. Now, that way, if you want to like test that, just kind of see how it's built. I just need to also disclose here that those scripts, like the ones we just created, not guaranteed for accuracy. Use it just as an idea, way, maybe a foundation to build upon and do your own analysis. But so I just want to share that with you. For those who are watching, in fact, let me do this on a recording. Where's a notepad? I need to change this to a notepad. Where's not this? Hold on. I need to change what this is. Switch gadget. There we go. Give me a notepad. Where's Scratchpad? Scratchpad. So if you're looking at this on a recording, really all you need to do is, I'm going to get rid of, come on. It's not going to let me get rid of it. Dang it. All you need to do is type in that last little bit, like from the exclamation XGKG23DR. You just type that in. So you go up to setup, then you go open shared item. And then if you just type that in right there, that little bit right there, then that will actually open it up for you if you're watching it on a shared or on the recording after this class is over. Okay. So hopefully that helps. All right. Now that we have that, let's do this. So I'm going to go over to chart and I'm going to go over to, I have a watch list already pulled up here, but what we can do is go to, I have it in personal, and there's a couple different things I want to share with you here. One, here is the watch list that we just pulled up, right? Or that we just saved. We can do this, or, you can actually, when I saved that scan, it's right here and actually just kind of scans and gives us the results. There's two ways that we could look at that. All right. And so it's kind of nice to have that scan capability. But let me do this. Let me make sure we have this on red and this on red. And then what I like to do, just kind of make it quick, is go through them and just say, okay, what do we have? I start going Dow, and then I go, and I just go one after another, looking and saying, oh, what do we have? And what do we have here? We have APH, right? So this is what we're looking for. Upward trending stock, runs up, pulls back, bouncing off support. Looks like it just had earnings. In fact, 92 cents was the earnings estimate. Actual 97, so it looks like it beat it. Had a little bounce off support, right? And so earnings is over. Possibly, I don't know what's going on with the implied volatility. Let's check that out. Obviously, it could potentially drop down from here. Now, let's see. Yeah. Let's see. Draw a line across here. Maybe this is the lower end of it. Higher end, possibly up in this ballpark, somewhere in there. So it's been dropping down from this earnings, but hopefully there's still a little bit of juice in there. Let's go check it out, shall we? Go check it out. So what we'd look for on this, technically we got that upward trend, bouncing off support, post earnings. So we have support somewhere down here about 140, looks like 140-ish. And so let's look to sell something just below that. So I'm going to go over to the trade tab, and we have APH up already because I already have that linked as well, because I have anything that's red, they're already linked. So it's really nice. It goes boom, 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 and gets us there, right? All right, let's look at how many days we have. 22, 50, 78. Well, 22 is probably, we're getting on the shy end of that, so the premiums aren't going to be quite as juicy on that. 50, we could go out to that. Let's just see what 22 would do, because if we can make it work in 22 days, that's obviously more advantageous to us in the sense that there's less time that it's sitting out there, right? So again, it was 140, right? Wasn't 140 we wanted to be at or below, using that as kind of our buffer zone between us and price action. So 140, if we sell the 140, maybe we buy the 135. Let's see what we got there. We put these together, and this is going to be a little bit tight. This is going to be a little bit tough to get now, because we look at this, it says 85 cents, right? And that's actually the mid, which, in paper money, it fills immediately, right? In real life, you may have to go a little bit tighter, right? Like a little more towards the natural. And so assuming it might be something like 65 cents, and 65 cents on how wide is that spread? 5 wide spread, that's not great, right? I mean, what are we talking about? $5 minus 65 cents is going to give us what, 435? So 435. And so our risk reward, 65 cents divided by the 435 risk, is only what, a 15%. And so a little bit on the low side. So, even though it is on that 22 days, which is a little bit, is nice, it's still, we're just not getting a lot of juice out of that for the time, even the 3 weeks that's still out there. So unfortunately, that's the way. It's good for us to walk through this because that's the way it goes. I mean, sometimes you just, you look through it and it's not there. So, okay, you go on to the next one and you just continue on through, and say, okay, technically, does this look good? And then if so, let's look and see if we can pull something out of it. Now, so I've already ran through some of those. And so let me find, where's my notes for today, and grab the ones that as I went through this list, like I came up with PG. Now check this out. This one's interesting because Procter & Gamble was on a downtrend. You can see the quite the strong downtrend. But what's happened more recently is, check this out. It hit a bottom, rallied up, hit a bottom, rallied up. Well, what do we call that, when it hits the bottom twice? It shouldn't be too difficult to figure out. I'm going to zoom in on this, make it a little bit more apparent and make that a little bit bigger. In fact, I'm just going to move this out of the way. I'm going to remove the study. Double bottom. Yeah, double bottom. Oh, come on. How come it didn't go anywhere? Oh, wait, do you really want? Yes, I do. That's why it didn't go anywhere. All right, double bottom is what it is called. And so here, let's draw this out again. Here's our support level. Here's the resistance, right? Came down. In fact, let's change color on it real quick. Came down, rallied back up. There's one bottom, there's two bottoms. And then what happened here is it broke out. It came back and it's doing a retest, right? And so that's a very classic retest on that double bottom, bouncing higher. And so from a technical perspective, that's nice. This is actually the trend reversal. That's what a double bottom can often act as, if it breaks the upside, is a trend reversal. So let's go look at this and see. Hopefully this might give us a little bit better premium. So let's go back to the trade tab on that. Trade tab, got PG up. Let's still look at that 22 days till expiration. This one gives us a few more options. But let's just see what this one does. If not, maybe we'll go out to the weeklies and see what else is out there. But I apologize. What was the price that we were looking for? We were looking for it to be around 147.5, somewhere in there. Above that, that's kind of where support is, around 147.5. And so let's see what this gives us. So, well, this gives us, dollar increments. And so let's just see what 147 does for us. And so let's click on we're going to sell. So we're going to go to the bid. I want to sell the 147. So we're going to bring in the $1.28 credit, right? But again, we're at risk of, if we're selling at $1.47, that stock can get put to us. And if it drops down, we can go all the way to zero. And so that puts us at risk. And so one thing to cover that risk is we can buy another one. And so let's go too wide. Let's go 145, and that would cap our risk. So again, we put it at 147. If the stock were to drop, let's say it drops to like 130, right? Someone would stick it to us at 147. We'd be on the hook for something that's only worth 130. Well, this allows us to sell it to someone else at 145, and so that's a risk of $2 now on that. And the credit somewhere around there, about 45 cents. So this is a little bit better for. In fact, let me just lock that in so it doesn't move. Locked in at about 48 cents. And so from $2 minus 48 cents is going to be $1.52, right? I mean, we can do that math in our head. And so that would be our risk on the trade. $2 wide spread minus the credit, the profit that we could get from it, potential profit, 48 cents gives us $1.52. Now, 48 cents divided by that risk of $1.52 is going to give us 31. So compare that last one we did at 14-15% to this one close to 31-32% in that same time frame. You can see this one is just setting up better for us, right? And so let's see. Let me see what else we have. Okay, higher, lower, double bottom. No, okay. All right, let's do this now. So let's go ahead and place a trade on this, right? And with the risk, we already mentioned the risk is at $152. Well, in our class, we've been using $1,000 as our overall risk. So we're going to take $1,000 of our portfolio risk. I'm going to divide that by the trade risk. This trade has a risk per contract of $152. and that's going to tell us we can get, well, 6 contracts. That seems to be the running number around here. Is, it seems like, because our last 2 trades were 6 contracts as well. So let's change that to 6 contracts, and then I'm gonna leave that as the limit. You know what? And I'm gonna send it off. If it gets filled, great. If not, then that's okay too. I'm not gonna chase it. Just hoping that it'll make it, or I'm not gonna like change it saying I absolutely have to have that. If I need that credit and that's where I want to call the line in the sand, we can do that. And then you can decide where your line in the sand is, but you got to be careful about, if you change it to a market, you could get filled somewhere completely different. It may not work out with the same risk reward that you were intending. So we're going to go ahead and send that one off. All right. Okay. Let's jump back over here, and a couple more that, Clorox was another one on that list I thought was interesting. Look at very similar setup, right? Very similar setup. Notice how it came down, bounced, ran up, bounced, almost double bottom again, rally, this was a double rally. Now, here's the thing. This is a setup that was very similar. I thought, okay, let's go look at this one, except, gotta be careful, except for this, that earnings, right? That earnings announcement, that can change things. And so we'll have to just keep an eye on this one, see what happens, and see if there's still an opportunity between now and next week when we meet again. So we'll keep an eye on that one. Netflix was another one that came up. Now, this one is not bouncing yet. This one is just sitting at support. But the reason I brought this up, it's already post earnings, and this support level goes back years. And so this is a very long-term, solid support level that's been there. In fact, if I go out to like a 3-year chart, you'll see where this has been. I mean, these are weekly charts, right? So these are weekly bars. Bounces there, comes down close to it, bounces again there. And so it's back to a long-term support level. And so even, longer term, the bearishness is starting to subside. There's potential of a bounce off of this long-term support. It hasn't yet, and we don't know if it will. It can definitely break, but it's something to keep an eye on as another potential setup. NCLH. This one's interesting because we have kind of almost this island gap reversal, right? And so this one, look at this. It has some gaps in it, but definitely has some support. When you get these gaps, these create areas of support and resistance. And so where it gapped down here, that created a level of resistance now, and same there. Because look at how this one right here, the spot where it opened the gap, happened to also become right there, the support later on. Isn't that crazy? Isn't that just crazy? But so what's happened here is it's rallied up above that, came down, bounced. Then right here, this is where it gapped, a small gap, but it kind of gapped, and it created this little bit of these 5-6 candles out on their own, and then gap back up. And so that's why I call it an island gap reverse. So if I were to activate this, this is just, just this like this little kind of these few candles out here on our own island, and now it's back up. And so there's a potential here. Let's see, we don't know. Is it going to offer us anything? We're looking to keep that around $21, $22. And so now this is a lower price stock. May or may not be there. But we can always go check, right? And so here's our $22. We're looking at that at 66. We'll look to sell that. And let's go again, $2 wide. So we'll drop on down to the 20. Click on that. So again, our risk on here, we're selling the 22. So we're at the hook for $22, but we can then buy it from someone else at 20. So that's our risk. That's a max loss there is $2. And for that, well, this is getting close. I mean, this is 44. What if we get 45 cents? Don't know if we'll get that or not, but we could try it. And again, kind of the same scenarios we just had on the last one. If the risk is $2 and we're gaining a potential profit per contract of $45, then that leaves us with a net risk of $1.50 or $155, right? And so what's that ratio? Well, 45 divided by 155 is going to be pretty close to the other one, maybe about 28, 29%. Or, yeah, about 29, 30%, which, some people have their spot, they want it above 30%, but also it ties into that is how much time till expiration. And when we're only talking 3 weeks, it's okay to, you gotta figure you're going to get less. And as long as it's not just, just almost nothing. I mean, you gotta figure, if it's closer to expiration, you're not going to get as much, right? As if it's you got like 50 days or 35, 40 days. So anyhow, so still at 30%, we'll go ahead and take that. It's a lot better than the 15% that we looked at on the other one. Still not too bad. Some people look for like 30 to 40% return on risk, but you decide where it is for you. All right. Now, again, with that $1,000 of risk on our account for the portfolio risk, I'm going to divide that by the 155 trade risk. It'll say 6 contracts. So once again, let's drop this down to 6 contracts. We're going to go ahead and confirm and send that. And no warnings or anything. Get that sent off. And I'll mark up our chart to reflect these trades. And we'll see if we get filled first of all. Again, I'm not going to chase it. Just going to let it be. Now, so let's just make sure I didn't miss anything. One thing I want to do is actually, I want to bring up, let's see if I can grab this over here again. Please, again, if you find this valuable, please like and subscribe to this. But another thing you can do that I think, I really want your opinion on a couple things, and this is why I'm bringing this up just before we go, is when you come to our homepage, our YouTube homepage, there's a tab here called Shorts. And these are a lot of just really short topics that I've been creating on different just a lot of different concepts, and they're 3 minutes or less, so very quick to look at. And like this last one I did using RSI to confirm, this was just posted a few hours ago. And so what I'd like you to do, please go check it out, see what you like, and then leave a comment in there and tell me, what do you like about these, what you don't like, what could you see differently, or topics you'd like to see. And, I even filmed this in a little different spot, at home. And so you can get a little different view of me there. But just let me know, what you think of it, or what would be beneficial to you, and hopefully you'll gain something out of these little short videos. And, again, this is like 2.5 minutes long, so it's very quick. So please go out there, give that one a peek, give any of them a look, and leave me a comment. And with that, I actually want to ask one other thing of you, because I want you to comment, even if you're doing it in the comments on a recording, is there's always a debate among coaches about what is the best look. And so is it the black or is it the white? Which one is better for you as the viewer on your side? And so let me know, put those in the comments below so I can get an idea of, which one is best to teach from. Because I just want to make sure that whatever I'm teaching from is best for you, that you can absorb it and see it, understand it as much as possible on your end. Okay. All right. Let me just check, make sure we're not missing anything. I was wondering, the probability, is that decent for a short period of time? I'm assuming a 23 delta for the 145 and 32 for the 147 is too aggressive. No, so actually those deltas, that's a good question on those deltas. There, we sold this the 22, and the delta is 35. And so a lot of times, people, you can decide, but kind of as a baseline, just for an example or trade, we're looking at delta around 30 to 40 kind of ballpark, and looking for the similar kind of return on risk. And so, that tells us we have that 65% probability. The delta, by the way, is just a roundabout. It's not exact probability, but it's a roundabout. But let's see, what was the other one we did? Remind me. PG. Let me pull that one up. Procter & Gamble. And that one, 32, so roughly it's saying there's kind of this approximation that it's going to be about 32% probability to be in the money, or another way to say that 68% probability that it'd be out of the money. And again, it kind of falls in line with that 30% return on risk. So hopefully that gives you some ideas. Okay, black. Okay, black and light work. Okay. Lower delta. The lower the delta, the higher the probability. Yes, and the lower the probability, the lower profitability for short verticals. That is correct. The lower the delta is a higher probability, and the higher the probability, the less profitability is generally how that pendulum works, right? As you go higher on probability, the returns, the reward there goes down. And as you go, it's not as probable, meaning it's more risky, then also the probability goes up. It's the compensation of that, and that's just the way they work. All right, we're gonna call it there. Hey, thank you so much for joining me. Hey, keep an eye on that homework assignment, those couple stocks out there. So again, we went through, we talked about what's going on with the market, covered some major economic announcements, reviewed the positions that we already had, ran a scan, looked at some trades, placed 2 paper trades, and talked about a few other things. So we got a lot in today. That's enough for now, right? So we'll call it a Thursday wrap, and I'll look forward to seeing you all again next week right here. Till then, take care.